Hello guys and girls, welcome to episode 7 in the Foundation series. Very excited for this episode as we go into ASR and backtesting. There's going to be so many key takeaways from this episode, very important, and the importance of really understanding how you do your ASR and what you really want to take from it, because that is where we really dive into looking for patterns, not just in the market, but patterns within your trading, and that's how we really evolve as traders. So let's dive in. Right guys and girls, welcome to episode 7. So this is where we get into journaling and trade refinement. One of the most important things, you need to journal. You need to be doing your ASR, as we call it, advanced self-review, and seeing not just patterns that we see in the market, but patterns within your own trading behavior. This is how we learn and grow. So throughout this, I'm going to show you a few things, then we're going to go over what a reviewing process looks like when we're reviewing our trades, and then also a bit of back testing as well, so you can understand this whole process and how it complements each other. So first up, let's take a look at trade journal. So what is a trade journal? Well, journaling and self-review is a major part of the journey to becoming a successful trader. You learn from your mistakes, which allows you to fine-tune your skill set and refine yourself as a trader. We've created a simplified template that you can use to journal your trades, and it doesn't overcomplicate anything. Keep it simple. Document every position, and after, record the result. Make note of your emotions, review the position, and see what you can improve on so you don't make it the same mistake over and over again. Having a journal to look back and evaluate is key component to refining that skill set within the markets. So what are the benefits? Well, the benefits of keeping a clean and simple journaling routine is that you'll be able to accurately track your results with a direct correlation of the quality of positions that you're taking. This is the key thing. Trade refinement and journaling are hands down one of the most influential ways that you can improve your trading and weed out all of the mistakes that you might be making in your routine. Through the journaling process, along with backtesting, you'll begin to collect data and understand on a subconscious level how certain pairs behave, thus increasing your strike rate and depth of analysis within the markets. And this brings me on to the next part as we move into the trade actual refinement. So with trade refinement, what does that mean? Well, trade refinement is the process of going back and reviewing the trades that have been journaled. We go back and analyze what we could have done better in all 3 stages of the position: entry, management, and exit. This allows us to refine our trading strategy and come away from each position with more knowledge and know-how, whether it be a winning or a losing position. There are always learning opportunities to take from any given position, which is why the Falcon community as a whole is constantly growing and evolving at a rapid pace. We are refining the strategy as time moves on, and as the market evolves, we improve, and that's the most important thing. So trade refinement. Trade refinement is performed so that we can outline what we're doing wrong, allow us to tweak and refine these mistakes, and maximize our profit potential by increasing the speed of our learning. You can begin to uncover recurring mistakes in your plan without proper documentation or trade refinement you may never catch. Keep everything documented and you'll be able to refine your skill set as you go. You may take a lot away from trade refinement, such as stop loss placements, trade management, trade execution, whether or not the position has a higher time frame support. The list goes on. There's so much that you're going to gather. And at the beginning stage, you learn a lot from your losses. And as you develop and grow, you start to learn more from your wins. The adjustments you make in your trading will always be subtle. However, it's those minor 1% tweaks that you can often see the biggest impact in your trading. And we can see that in life in general, just minor 1% tweaks, they're very powerful. Now let's take a look at how to journal. So when we look at how to journal, included with the Falcon membership, you will receive a trade journaling spreadsheet. We've kept this very simple for your journal purposes, using a similar template for journaling and backtesting that has been effective for so many students, are both in the resources section on the website. Now, in the process of the journal, we've actually improved this more and more, and we've got to a point where it really does help with the process, and we believe it's the most effective way for you to journal your trades. Integrating screenshots into your journaling allows you to have a visual representation, which I'll show you in this episode, of the trades that you're taking. Annotating the screenshots on TradingView also allows you to keep a detailed note in a clean, efficient way for future reference as to why you took the trade. It's easy to go too in-depth when you're journaling, which is why we've kept it so simple. Make sure your focus during the live market conditions is always on current price action. This way you can ensure that you're always fully present in the markets to make the most calculated decisions and analysis. But now let's look at when to journal. So when do we journal? Well, we recommend journaling trades simply right after you've taken them. We make the process simple and decluttered to keep the focus on live positions, so you can quickly take notes from previous positions whilst keeping your attention on the current price. It's easy to get too overcomplicated with journaling, and you spend more time journaling than trading. And some of us has been there, but journaling should be done right after a position. We've created an easy to use journal spreadsheet for all the members that include data such as currency pair, direction of the trade, the entry date, as well as screenshots before and after the position that was taken. As the trade progresses and your management kicks in, we can leave further notes on the position for more reference when performing your analysis of past trades. By following this simple yet effective journaling technique, you can take the value away from every single trade, as well as keep an organized profile of your trades for your own records, and to show to potential investors if that's something that you're interested in moving forwards. So now what I want to do is actually take you through the ASR process, what it actually looks like, and the templates that we use. This is going to help you look back and see how simple you need to keep it and what you're actually looking to learn from those trades so you can move forward more quickly and more effectively. Let's take a look at that now. So when it comes to improving as a trader, it's important that you understand how to do your advanced self-review. So what I'm going to take you through now is what that looks like with a template, and also what it looks like on missed trades with a template, so you can download them and make sure that you're constantly moving forward. You need to learn from these things so you can always progress as a trader. So let's start off with the template firstly. So this will be here for you to download. So essentially very simple in what we use in Notion. Notion is very similar to something that you may have heard of called Evernote. So it's entirely up to you whether you want to use Evernote or Notion or your own thing, but here is it for you to download. So as you can see, we've just got first half of November, second half of November, and you can see what we've titled here is just total trades, wins, losses, break even, total profit, and just keeping things very, very simple. So when it comes to the detail that you need, so we take a look at this part. So here we can see we have our symbol and the direction. So we'll be looking for, let's say, euro dollar long. We have the date of the trade, the profit loss, and then the setup grade. This is important for you to look at because you want to review this once you have more data of your trade. So high probability setup versus valid setup. You need to be tracking what you mark on as a high probability setup or a valid one, so we can know whether that is or not, and then you can make the relevant tweaks. Then we move on to trade analysis. So again, just a very quick summary of the reason that you are taking the trade, took the trade, so your trade analysis. Then we do the forecasting, so you just insert your screenshot of a description of what you previously forecasted before the trade materialized. This helps for you to really understand what was you forecasting. Are the trades that you're taking just kind of out of thin air, or are you actually looking at forecasting these trades and then they're playing out, so you're building that confidence? So again, just your screenshots of the higher time frame, lower time frames to look at the bigger picture, and then of course your trade management, summary of the reasons how you managed the trade, the way that you did and why you did it, and is there anything that you can do differently, so then of course you can make those little tweaks to potentially have things more efficient and make you progress. So that's the template, you can download that. Now let's move on to the next part, which is this actually filled out. So here we have one filled out here, and this is for the first half of November because we're still in November. So you can see what this looks like. So here we have CAD Yen short, and this date was on 29th of October. Profit and loss, this was plus 0.39%. So nearly 5.5% on this trade. This grade was high probability trade, important. And again, last part, congruent with plan. Yes, you want to make sure that the trades that you're taking, you're sticking to your plan. Otherwise, you can end up taking trades that are not within your plan and sometimes actually work out, but over a large sample size, they won't, and then you can create bad habits. So you can see here trade analysis, and of course you can pause the video at any point and take a look at these things. But as you can see, just a brief description of the analysis. CAD Yen formed a 3-touch channel on the high time frames, which align nicely with the double top region, etc., etc. And then you start to build that picture of why you're taking the trade. Then the psychology. Psychology was good. I'd forecast in advance my 2 entries ahead of time. So again, you're making sure that your psychology, that you're actually forecasting these trades ahead of time. They're not just random trades that you're taking. Then we move on to this part, lessons learned. But you can see this isn't filled in. This is blank. Why is that? Because sometimes there isn't a lesson to be learned. And you might be thinking, surely there's a lesson in every trade. Sometimes not. And when you overanalyze, you overthink, and it's something that's just not there. Sometimes the trade just didn't play out, and it is what it is. And you'll start to learn that more and more as a trader. Now, at the beginning stage, of course, you're going to find more and more lessons because that's where you tend to make more mistakes. But as you progress, you'll find that there isn't just a lesson in every single trade, and that's totally okay. Now we move on to forecasting. So actually forecasting screenshots, seeing what you're looking at, what to play out. And then you can see the ascending channel here on CAD Yen. We just break above the ray line, and we've got the potential entry types here with the continuations on the way down. So you've got your forecasting here, and then you've got your screenshots. So you can see the live price at the double top region, and then you've got the first entry. So first entry and trade management, typical style of management here, which is really, really important that you've got something that's typical, congruent with your plan. Trailing my stop above the previous high, 1 hour swing high, as price continued to move to the downside. And now this is where about you're locking in profit, giving price enough room to breathe, and essentially my line in the sand. Now, we all have to have our line in the sand of how we're managing these trades. It's very, very important. So a nice 5.39% profit. And as you can see, just filling out, keeping things simple. And you can see here with the screenshot, it's important to take a look at the overall structure of where you got taken out. So then you can go back and look at those trades that you've taken to see if you're doing things in a similar way. Now let's moving on to the next position. So again, CAD Yen, you've got the date, very similar. The grade, high probability again, congruent with plan, yes. The analysis, the psychology. On this one, there's lessons learned. So the previous one, it wasn't filled out, and this one is filled out. So nothing really that I would change or do differently here. I set my entry around 3 pips below the correction, which was sufficient in my opinion and relevant to the correction. This was just one of those scenarios where I got tagged into position slightly earlier than expected by the spread, just 1 or 2 pips, which happens, but equally stayed into the position by 1 or 2 pips. So again, the forecasting, the screenshots. So sometimes there will be a tiny little lesson. It's important that you take the time to write those out. So screenshots again, trade management, and then we move on to the last trade, which is the S&P. So short trade, which is a break even, high probability trade, congruent with plan, yes. Again, trade analysis, psychology, no lesson to learn on this one because you don't want to overcomplicate it, and the screenshots and the trade management. So it's important to take a look at these and really study why you're taking the trades, and what you're going to see is just similar screenshots. And when you can start to see these high probability graded setups repeat themselves, and you kind of go back through your analysis and your ASR, you see that, okay, hold on a minute, I'm actually really recognizing these. I'm taking these over and over again. They're congruent with my plan. It's this work that you need to put in if you're serious about succeeding as a trader. You have to put the groundwork in now to get to that stage. So that's a template. You've got it there for you, and really take this serious. And this is what it looks out, filled out, so you don't overcomplicate it. I've seen so many plans and ASR before where they have 15 pages on one setup, and it's just unnecessary. It's overdoing it. You want to keep things simple as possible to progress. Overcomplicating it doesn't mean that it's going to improve you faster. If anything, that actually slows it down. So keep things simple. Now let's move on to the missed trade section. So now let's take a look at the missed trades here. So this is filled out, and this is one of March. And it's really important that you understand why to do this, because a lot of times you could be doing the break-even dance, for example, or you could be in minus and you're missing trades regularly. You need to bring awareness to it so you can fix it. And sometimes it's just a 1% tweak. It's okay to make these mistakes. We all make these mistakes, but you've got to learn from them. Every successful trader was once an unsuccessful trader. And how did they become successful? By doing this work. So if we take a look at here, we've got March total 16% of missed positions. That gives you a lot of confidence. So you've got the date, profit 6.8, high probability setup. You've got your analysis. Was I forecasting this trade on this day? I was forecasting on New Zealand CAD. If I was forecasting this trade, why didn't I take the entry? Well, this is the reason. The reason I didn't take the entry was because it required discretion to read between the lines at the top of the structure and drop to the 15-minute chart for the entry. However, because I was essentially waiting for something perfect, so in that perfectionist mindset, I didn't manage to get involved in the trade. It's important that you understand this to see, are you doing this over and over again? Lessons learned. One of the lessons from this trade was to gain that confidence with the high probability setups at the top and the bottom of the structure. Essentially, the key lesson within here is learning when to read between the lines when you're at the top or the bottom of a structure. And then you kind of get to the stage of that subconscious competence, and seeing that will become second nature after repetition after repetition. Second lesson is to practice discretion at the top and the bottom of the structure, gaining confidence with that in all areas of learning and reading between the lines. Remember, you have to have a systematic approach. Discretion doesn't mean just taking any other trades. It's learning when to apply that skill set, which discretion just comes as a side effect of having experience, so you can't force it. So you almost have to make these mistakes to then learn from it. So really good lessons there. Having the screenshots, your forecasting, again, your trade management, exactly how you would do it. Learning when to take a message from the market. This is really, really key. And again, you have to look at this as exactly how you would take the trade, not just looking at it and saying, I would have banked 20% or 50%. You actually look at it, the reality of how would you actually take it, right? Are you just looking at it and cherry picking, let's say on the 15-minute chart and saying, well, if I would have closed it down on the 15-minute chart, I would have banked X amount. Well, the truth is you probably wouldn't, and you wouldn't do it at scale either. It's too emotional. So stick to the 1 hour like a professional. So as you can see, looking at the missed trades, you've now got the template for trades taken and missed trades, and then you can see how simple it is to fill it out. But now what I want you to do is really absorb this, understand the importance of these 1% tweaks, but now let's move on to what to do next. So now you can see what the problem is if people are not doing this, but how do we get to the solution? How do we fix this? There's one thing doing your ASR, but we have to take that a step further, which is where we move into backtesting. Why would we do that? Well, think about it. If you keep missing trades, and you just get used to almost as an excuse to, yeah, I'll just put it into my ASR, it's another missed position. You're not actually going above and beyond and learning and making sure it doesn't happen again. And where that comes from is backtesting. You need to go and backtest efficiently to actually see, right, so why am I not taking this trade? Is it a lack of clarity? Is it a lack of technical skill that I just don't understand how to actually enter the position? Or do I just not know how to manage it? Or does my forecasting need to increase? And if your forecasting skill needs to increase, then your backtesting must increase first. You have to be able to effectively backtest to be able to effectively forecast. You can't have one without the other. They're congruent with each other. They complement each other. So what I want to do now, so we can bring this all together, let me show you how we can backtest in the most simple and effective manner so you can extract the right bit of data that's going to increase this overall performance. So as you can see, guys and girls, the ASR process, that self-refinement, is so crucial to your trading. And when you really, really understand where you're going wrong, it makes the next process even better, which is what moves me on to backtesting. Remember, you can't fully backtest until you fully understand the strategy. So don't expect to get this straight away, but we're going to show you how to backtest and show you how simple we keep it. But with your ASR, when you're starting to see patterns within your trading, let's say, for example, you're taking a lot of losses at the top and the bottom of the structure. Well, maybe you need to go and backtest those specific things that's going to help you uncover that. So you see how you learn from documenting those results. Now let's take a look at backtesting and what it is if this is the first time you've heard of it. Essentially, backtesting, it's a process of executing a strategy on previous historical price data. The beautiful thing about TradingView is it has a bar replay feature, and that allows you to go back in previous data whilst hiding the data in front of it. This allows you to go through the market in real time and analyze, that's execute positions, manage them. Backtesting is essentially simulating a real-time trading routine through past price action. So you can gain that insight into the currency pair's behavior and benefit from real price action within the Falcon method. The same template you'll use for journaling, you can use those trades for backtesting these individual currency pairs as well. But it's really, really important that we don't get too caught up into backtesting. It's a key component. But to fantasize over it is not the right way. See, what people tend to do is they will look at something like and backtest even the Falcon strategy, and they may see, wow, I could have made 50% in 1 month. And then we fantasize over these returns. But we have to start asking ourselves those tough questions. Would you have honestly taken the trade? Backtesting is about proving the strategy works, so you can see it for yourself on a subconscious level. After that, it's really about backtesting those specific areas and not infatuating with, wow, I can make all this return, but more so understanding, look at how powerful it is and how can I capitalize fully within that to myself as a trader. But what I want to do now is take you through the backtesting process so you can see how simple we keep it, what we do, how we can utilize the journal to add those screenshots. And I think it's really important that you take a step back and take your time with backtesting. At the beginning stage, you're going to learn so much from it. It is a key component, but don't fantasize over making 100% in 1 month. It's more so to show you how powerful the strategy actually is. So what I'm going to do now is take you through the process with a little bit of light music, some annotations, and show you the process of how we backtest and how simple to keep it. Right guys, so we're just about to get into a backtesting session, and it's important that you understand what you're looking to get out of it. Well, essentially, you want to build confidence in the strategy. You want to see how it works, and then you're going to learn the intricate little details. Now remember, when you're backtesting, it's important that you forecast as well, which I'm about to show you, so you can see ahead of time what you're thinking. Then what happens is that as we lay the foundations of backtesting, you start to build more confidence, because subconsciously you've seen it play out time and time again. You actually understand what you've learned in episode 3 and why we apply different scenarios to different situations. So for example, if you're looking at a risk entry or looking at a reduced risk entry, you'll see from backtesting, right, I understand why we would take it in this scenario versus taking it differently in this scenario. And it's really, really simple. So we simplify the whole process for you. So make sure that you do take your time with this process, enjoy this process, because it's such a key ingredient towards your trading success. We do get more advanced in the Falcon processes, so definitely check that out after. But at this stage, we're just going to get into a backtesting session for USD CAD. Let's get into that now. Right guys and girls, so we're about to backtest USD CAD, and it's really important at this stage that if you don't get it straight away, that's fine. You're likely going to need to go over this multiple times, especially if you're new to trading or you're new to this strategy. But learn to enjoy it. Remember, it's a key ingredient towards helping you become a better trader on a subconscious level. So let's get into the higher time frame first, and then we're going to build lower as we go. Now we've built the picture on the higher time frames. As you can see, just simplistic. We're just looking at this bit of data right now. No need to overwhelm yourself or anything like that. And what we're going to do now we've got the bigger picture, we're going to go to the lower time frame, and we're going to really forecast ahead of time, because the thought process here is not just looking at data that's already happened, because then you can just plot lines on and entries and say, yep, I would have taken this, 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 and this. But the reality of it in a live market condition, you probably won't. So there needs to be honesty within this, that you can really be honest with yourself. But at this stage, just learn how the strategy works. So what we're going to do is take a look at this bit of area of price. We're going to forecast ahead of time on the lower time frame and adjust it as we go along. So let's get into the session now. This stage now, what we want to do is we want to track that data so we can see how that plays out. So what we're going to do is go through the Falcon FX journal. Now, don't worry if you don't know how to fully use this straight away. There's going to be a separate video in Falcon Processes teaching you exactly how to use the spreadsheet. It is very straightforward, but if there's anything else that you get confused by, then you'll have that there as well. So what we're going to do is we're going to copy this and start putting now our before and after, entering our price values so we can fill everything out. The best way to get the most out of backtesting is if you track it as well. Rather than just doing it and relying off the mind, we want to track that and work from documents. So let's do that now. Right, guys and girls, so we're now at the end of the backtesting session. I hope you enjoyed that and you're following along. And remember, it's okay to pause, watch, go over it again. And as you get more confident with the strategy and you go through the whole course, you're going to get a point where you can backtest independently on your own and feel confident. Learn to love it, learn to enjoy it. Remember, it is a key ingredient for your success. And as you can see, just 3 trades there on $CAD, really simple. And filling this out and documenting it is going to be the best for you, because when you look back, you may backtest this now at the level that you are now. You've just joined us, or you've been trading for a while and you're going through this. Well, as you raise your level of awareness in trading, you're then going to be able to really grow as a trader. But what a lot of people do, they'll go and backtest that same bit of data they did, and the only way you'd know how to do that is because you documented it. And you might get something slightly different out of it, as maybe your style changes, maybe the way that you enter trades is slightly evolved. So it's really good to document this process now and then come back to this at a later stage as you keep evolving as a trader. So I hope you enjoyed that, guys and girls. Remember, you can go through this over and over again. Right, guys and girls, so hopefully you've learned how simple that we keep this with backtesting, and you can see the detail, the level of detail that we go in, so you can understand how to do that. It's really important that when you're backtesting, you're forecasting, as you saw. Forecasting while you're backtesting is so key. And in order for you to fully learn how to forecast, you have to backtest first. So your forecasting will be a reflection of how much you've backtested. Then your forecasting will improve and improve, and your results will improve. So you can see how we combine the two, and it really does set you up for success. So take the backtesting part seriously, and then as a side effect, it will naturally improve your results, and you'll start to see these things on a subconscious level. But now what I want to get into next after that, and this is really about, when you're tracking your results, not everybody wants an investor, but investment is key if you want to scale your account. So it may be something you're looking into. And at the moment, we're actually currently in the process of dealing with a lot of funders. And the reason as to why is that we want to be able to lay that pathway out for people that maybe don't have the contacts or the access to capital. We will always be here to assist you, and we're working on some very, very exciting things right now. So let's take a look at investors. So bringing on an investor becomes a very personal choice, because it really comes down to your comfort level, really, and your trading ability to be able to hand that emotional impact of trading someone else's capital. Like I said, it's not for everybody. Not everybody has the goal to want to trade investor capital. You may already have your own capital. You may just want to scale it slowly. There's no rush to compare it to anybody else, but it is an option there for you to scale. As a general rule of thumb, to go by, 6 months of consistent trading is required before taking on investor capital. The number is really relevant because you don't accidentally just achieve 6 months of consistent returns without knowing what you're doing. Now, really and truly, most investors are going to want 12 months, but a minimum, because you may be taking on some investment from friends and family, and I'm giving you the bare minimum if you're going to take someone's capital. After 3 months of results, should you take someone's capital? I don't think so. Even 6 months is, pushing it, but you don't accidentally just get 6 months of results. So that is the absolute bare minimum that is required. The impact an investor that can have on your progression can be significant, and I've been there many, many times. We simply cover the idea of bringing on an investor here, providing you with the knowledge and the mindset to be able to take on those sorts of responsibilities. Because when you're setting up for an investment, and we teach you this in a weekly content on a regular basis and at meetups, it's really important that you don't desperately get into deals just because you're desperate for money and then you set it up in the wrong way. You have to do it the right way and realize that you are a very powerful asset. So don't be desperate for investment straight away. Focus on actually learning, becoming the asset. Money is easy to come by when you're the asset. But those that go in with the mindset of, I need an investor, I want an investor, and you get into these kind of terrible deals that don't set you up for success. So take this part seriously, but at the same time, realize that you do not need to rush that process. And then when you focus on becoming the asset, guys and girls, that is something that you can sustain for the longer term and scale. Congratulations, guys and girls. Welcome to the end of episode 7. So now you understand how simple we keep it with our backtesting, so you can fully understand and grasp the key characteristics and behavioral tendencies of the markets. It's important that we use this data to our advantage, so we really understand how the market is moving, understanding that not every single currency pair will be exactly the same, and looking for those specific things that really help us to build our trading plans and all those kind of things. And it's okay to look at patterns within the market, but as you can see from ASR, doing your advanced self-review, we can really find those patterns within our trading. Once we can fully find those, we can fix the things that we need to, we can move forward and always elevate our trading.